Hello everyone, hope everyone's doing fine. Let's get this started. How's everyone doing? Let me know in the chat if you guys can hear me. Hello Angela, nice to see you here. Hello Danielle, yo, everything alright? Awesome Marcus, thank you very much. Awesome to have you guys here today. For another session with me, for another educational session. It's really a pleasure, to be honest, and I'm always really excited to be here with you guys and share all the knowledge that I can. All right. So thank you, Brian. Thank you, Abror. Really appreciate it. Let's get started. All right. So basically today what we're going to see is how to properly identify the volume levels that I taught you guys on the previous educational session. Okay. So to start, we need to understand certain criteria first, all right, in order to be able to start. Let's go to another chart over here. Let's remove these drawings and that would be fine. Okay, let's go to the upside. We need a blank page for now. Okay. Good afternoon, Judah. I hope you're having a great day as well, man. Thank you for your wishes. Audio is good. Awesome, deep and fun. Really appreciate it. All right, guys. So if audio is good, if screen is good, we can go ahead and start. We already have 78 people connected, which is really nice. Okay, put your mic a bit up, please. Okay, you can also turn up your volume as well. I will put a bit up right now, but still, it's always good to check your volume first. All right, so let's start, guys. The first thing we need to understand in order to find the volume levels is that volume needs to be directly correlated with price action. Okay, that's the most important thing to understand. We are not going to go and see like, okay, we have a resistance here, we have another resistance over here, we have another resistance over here, and so on, right? That's not what we want to do, because we want to make trading as systematic as possible in order for us to be able to actually trade what the charts are telling us, instead of guessing where might price bounce or where price might break out, etc., etc., etc. Okay, so in order to make trading as systematic as possible, because you can create a complete systematic approach to trading, right? But since we are discretionary traders, that doesn't mean that we're going to guess where we put our support resistance levels in this case, right? But we need to make the system as systematic as possible, all right? So in order to do that, the first thing we need to understand is that volume needs to be equally correlated to price action in order for us to be able to understand what we're looking for, okay? So we're going to start explaining, all right, liquidity gaps, or as you may know them, FBGs, all right, which stands for fair value gaps, all right, which, to be honest, I don't like that term, all right, not because it's from ICT or whatever, but basically because gaps are not necessarily fair value for price, right? Fair value is normally when the market decides it's going to be a fair value for an asset, not necessarily correlated with the fact that there's a gap on price. Okay, so in order to understand gaps, I'm going to draw here some candles. Okay, let's put this as a bullish scenario. All right, we normally have 3 candles for this example over here. All right, and those candles also normally have their wicks, right? We have candle wicks over here, All right. And as you can see, this candle over here, which is making the gap, all right, is leaving a space in between this first candle over here. Okay, this is the first candle. This is the second candle. And this is the third candle. Okay, so as you can see, this candle over here is leaving a space of deep liquidity, all right, in between the first and third candle. And this is what we normally call an FBG, or a liquidity gap, to have the proper terminology, all right? And I'm not inventing this terminology, it's just action market theory terminology, which basically explains how markets move, okay? So this is what we're going to call the liquidity gap. Now, some of you may ask yourself, like, why that happened, right? If you go into my previous sessions about explaining about action market theory, order flow, etc., you're going to understand that sometimes there's not enough liquidity on the order book, okay? And normally when we have these kinds of moves, all right, it means that there's an imbalance between what? Supply and demand. What does that mean? Because if you saw my previous sessions, you're going to tell yourself, like, okay, for every buyer we need a seller, and for every seller we need a buyer, right? But sometimes there is not enough liquidity in the order book in certain prices to fill these aggressive buyers or these aggressive sellers in the order book, which are basically market orders. All right, so normally price closed here, it starts rambling around here, and I'm going to draw this in a better in the best possible way in order for you guys to be able to understand. All right, so let's say this is price, right? Everything related to price can be explained basically on an XY axis. All right, so this is price, right? And I'm going to draw it this way. Let's go to brush. All right, this is price. Price started over here, then it went down to fill this week, then it started going up, a little bit more up, then it started rumbling around this. I'm making references of these candles, guys, okay? So I'm not drawing randomly over here. And then some possibly fundamental news came in. Trump talked about something positive, less tariffs, whatever it is, right? Bitcoin is accepted as a new currency in another country, whatever. All right, something positive, okay? Something positive for the crypto market. And okay, we have the order book, and the price is going to do instantly this. Okay, price starts building some liquidity here, then it goes up, goes down again, and then it ends up like this. As you can see, okay, if I copy this over here, here is where we are going to have our liquidity gap in price explained from this perspective. All right, why this happened? Okay, because all of a sudden people turn bullish. Okay, all of a sudden people turn bullish, and there was not enough resting liquidity orders here. And what I mean by resting liquidity are basically just limit orders in the order book, okay, on the depth of market chart. All right, so if there aren't enough limit orders to comply with the amount of demand that the asset is having right now, so that means that basically price is just going to, you can call it whatever you want, but it's going to teleport from here to here, because there was not enough limit orders to fill the buy market orders that were happening in this moment on the order book. All right, until it obviously market finds balance, like we can see here, balance. Remember, guys, balance. Okay, this is an imbalance movement. and we are going to write it over here. Imbalance, okay, meaning that basically demand is way bigger than the supply actually right now, okay? So that doesn't mean that there's not enough buyers against sellers, because for every buyer we need a seller, right? But there's not enough supply of limit orders to fill the market aggressive buying, all right? This may sound weird, but it is what it is, okay? So this is basically a liquidity gap. And why are liquidity gaps important? Because these areas tend to be and tend to act, okay? Let's put it this way over here. These orders, these price areas tend to act like magnets to price, okay? Because markets they tend to be efficient, okay? There's not such thing as efficient markets, because otherwise markets would be perfect and they won't need to move. But at the end of the day, price tries to be, okay? And in order for price to be efficient, it needs to fill this liquidity, this resting liquidity that basically created this imbalance in the near future, right? That doesn't mean that there's always going to be a fill, okay? That's important. That's important to notice, okay? Because we are going to see some examples. There are certain price gaps that price never filled again in the S&P 500, in the Nasdaq, in gold, in Bitcoin, etc., etc. And it's very likely that price is never going to be able to fill those liquidity gaps, because the current fair value is not applied to the liquidity gap itself. That's why I don't like the fair value gap terminology, because that means that price will eventually come to that place, and because it's price fair value, which is not, right? Because you can tell me that there's a gap on Bitcoin on $1.50. Does that mean that actually Bitcoin is going to go to $1.50, fill that gap, because that's the actual fair value of Bitcoin? No, it's not, right? So basically, these liquidity gaps act like magnets to price, because price tries to be efficient, and in order for price to be efficient, it needs to fill these inefficiencies that it left on the way up or in the way down, okay? Hope this is being understood, all right? If you guys have any questions, please let me know on the chat, and we will touch upon them on the mid-session or at the end, all right? So give me a second, I will take some water. I'm getting my throat dry of so much talking. So guys, tell me in the chat, how much of you guys use liquidity gaps on your trading or FPGs? Let me know. Or if you don't know about anything about this, also let me know, please. Oh, it seems that I'm not showing my face. Possibly. Now you guys should be able to see my face. I have been here the whole time. Sebastian, buy or sell limit orders. It really depends on the direction that we're looking for, right? Because right now the example means that we need enough sell limit orders as liquidity over here in order for the market to be efficient, but it's not. Sell limits because basically people are market buying, right? If we put this example to the other side, we will need buy limit orders, all right? Okay, so the gap between the three candlestick is not related to the timeline you're looking at, like the hourly or daily. Yeah, the time, like I have told you guys many times before, time frames are irrelevant. Okay, what it's relevant is price. So this gap can happen on the 1 minute, on the 1 second, on the daily, on the weekly, whatever. It's irrelevant. Okay. I use them to enter a trade. Perfect. That's good. Hi Chief. I use inverted FPGs. All right. So already filled FPGs, that also works, and that's why we're here, because that's actually true. Then both filled FPGs, filled liquidity gaps, and unfilled liquidity gaps both work as support and resistance levels. Okay, still learning about it. Amazing, guys, amazing. All right, so let's keep with this live stream, so you guys master this after this one. All right, so this is basically the explanation about liquidity gaps. There's, if you want to overcomplicate it, then you go and check market microstructure, right, and understand why this actually happens on the depth of market, and understand the difference between liquidity and volume, and the difference between sell limit, buy limits, etc., etc. But I don't think it's necessary. But because you already understand that a liquidity gap happens when there's an imbalance between supply and demand, and that these liquidity gaps help us to identify potential support and resistance levels. All right, that's all. That's basically all. You use support and resistance levels like, for example, Eker, right? He uses FPGs, right? And in order to be able to enter the market, because normally when price reaches these levels, it gives good entry points. Okay, so still learning about it. This guy's not what he's talking about. Very glad Luke didn't get some random LARP of ICT. That's fine, man. Yeah, well, every method works, to be honest. I'm not here to push the narrative that ICT doesn't work, because it does. Okay, but it doesn't necessarily mean that if you learn ICT you are going to find the holy grail of trading, which is not, right? Many strategies base it up on ICT work really fine, and that's good. That's really good. Okay, and basically any strategy can work on the market, but you just have to apply it consistently. Okay, and you need to know the numbers behind your strategy. That's all. And the other thing that we need to know is this terminology over here, which I call them order flow candles, right? But there's no actual name for this other than possibly reversal candles. Okay, why I do call them order flow candles? Because basically for this scenario, for this pattern to happen, there needs to be a lot of liquidity in certain price level in order for this to happen. And what I mean by that is basically this. Okay, is you have, let's say we have a bullish candle over here, and the next candle opens and closes are really aligned with the previous candle formation, and this is going to be a bearish candle. Okay, so let's say you have, let's put this on another XY axis example over here. Okay, let's copy this. Okay, let's put it over here. All right, what you want to see in price is essentially the following. Let's say here you have a resistance level, right? Price open here, it rumbled a little bit over there, starts going up, leaving a lot of imbalances possibly as well. Then it goes up into the resistance, it possibly creates a reversal pattern, and then the next candle starts going down again. Okay, so as you can see, both open and close of these candles over here are at the same exact level. So we have open and we have the close. Okay, this yeah, sorry, this is the open and this is the close. Sorry guys, my bad, I got confused for a bit. And this is the open for the bearish candle. Okay, the close of the bearish candle doesn't necessarily need to be exactly where the open, but at least you have this pattern over here. And normally when this happens and on charts, you are going to see a change in the trend. Okay, as you can see, we were bullish here, and then these formation candles happened over here, and then price trend shifted. Okay, so these are the two things that are essential in order to be able to find volume levels. Okay, why? Because volume needs to be equally correlated with price action in order for us to be able to find the support and resistance levels and where we want to interact with the market. Okay, let me see if there's any questions. Oh, you mean crypto Twitter? Okay, yeah, it's fine. It's the same. It's the same concept. You know, like many strategies can work, right? Many strategies can work. They are just badly marketed or whatever, because everyone's always looking for the holy grail in trading, which is actually doesn't exist. Not even my strategy or crypto data strategy will survive forever in trading, because markets are constantly shifting its narrative. So what you need is basically either you are creating constant new strategies that adapt to the market conditions you have now, right? Or you are constantly upgrading your strategy to adapt to the current market conditions. Okay, so there's not such thing as something that will work forever, because otherwise I would just simply apply an internet strategy that has a nice equity curve, right? And then apply it forever, leave it running, and I will just look back and take my millions. That's not how it works. Okay. How long have you been in trading? Hello, Marquez. I have been trading for about 7 years now. Luckily enough, I'm a profitable trader now, and I basically make a living only out of trading. But to be honest, guys, trading is boring. It might sound controversial or whatever, but it eventually will turn boring if you start applying the same strategy every time. So only at the start, to be honest, is where it gets exciting and you start learning a lot and everything. But as soon as you start applying the same strategy that's been profitable for you, it gets boring. But that's why you start, like, trading is amazing at the same time, because it allows you to do many other things in your day that you also like. You know, I like doing content, I like doing live streams, I like teaching people, I like sharing my knowledge, I like going for walks, I like doing exercise, and I like many other things that I'm able to do because I'm able to live out of trading, right? But trading is a game of consistency, and at the end of the day, it's also a game of applying the same criteria every single day, doing backtesting, journaling, etc., etc. You have to treat this as a professional business. How long did it take you to become profitable? About 3.5 and 4 years, to be honest. Yeah, something like that. You are awesome, man, as well. Okay, so let's continue. I will leave the questions for the end of the session. All right. So takes a long time. Well, it actually depends. To be honest, I have had some students that have made it in 6 months, a year. They are already profitable. So possibly for me, it was because I didn't have a mentor. Okay, I started right away with the knowledge I found on internet. And as you guys know, there's a lot of knowledge out of there. And if you mix a lot of stuff and if you go ahead and try to apply everything you learn, it's not going to work. Okay, so in my opinion, and as Luke always says, you need a mentor. You need a mentor that is already in the position that you want to be. Follow them, find your own strategies, find your own methodologies, okay, based on what the mentor is letting you know, because the mentor is not here. I'm not here to teach you my strategy for you go and apply it on the market, because it's possibly that it's not going to work for you, okay, because I see things differently from each one of you. I'm here to guide you in order for you to be able to create your own strategy that is profitable on the markets. That's completely different. Okay. I keep blowing funded accounts. Oh man, that's just completely normal. It is what it is. I've been there, and I keep blowing funded accounts. That you just need to understand them from a complete different perspective, which is risk to reward, and possibly we can talk about that in the future, right? Okay. All right, let's go. And what we need to understand now is we are understanding price action here. Okay, now we need to understand volume. Okay, so if we go and trace simple XY axis here as well, normally what you're going to see in volume is something like this, right? You see something like this. It starts going down, and so on. All right. What we need to understand is what in auction market theory it's called the low volume nodes, and also the high volume nodes. If you guys saw my previous explanation about volume profile, you are going to understand that there's a fair value area in which you have the high value area and the low value area, right? When we see this kind of volume profile, what we are trying to understand is that there might be different fair value areas for all of the chart, right? There's not such thing as a fair value area that compensates everything, okay? So in order to understand this, we have low volume nodes, which basically low volume nodes are valleys, okay, on volume chart, and high volume nodes are the spikes on volume. Okay, so for example, I'm going to highlight with an arrow over here. Let me put this out, and we are going to highlight these low volume nodes. Oh, it seems it was the other way around. All right, we're going to highlight the low volume nodes with this arrow over here and put it as a line. Okay. Okay, I will answer questions as we finish. All right, guys. Or if I see any relevant question right now according to what we're seeing. So we have a low volume node over here. We have a low volume node over here. Another one over here. Another one over here. Another one, and so on, right? So low volume nodes are red arrows, and we're going to highlight high volume nodes as green arrows, okay? So now we need to find high volume nodes. We have one here, we have one here, okay, we have one here, another here, another here, and so on. You guys, I hope you guys understood this, but this is basically how it looks like, okay? Now, what is the difference? Okay, what is the difference? Is that normally in high volume nodes, and as well if you guys looked at my previous educational session, high volume nodes are directly correlated, okay, to points of control, which basically means that it's where most volume traded in a specific time. Okay, that means that the normal price action that we often see on these high volume nodes is range formations. Okay, why? Because there's enough volume to keep price trading inside the fair value instead of it trading. Okay, and the low volume nodes are directly correlated with either liquidity gaps or reversal candles, which I also call them order flow candles. Okay, and that means that often the price action that you're going to see on low volume nodes is either spikes in price, okay, or breakouts. All right, so in order to highlight this, we are going to see on low volume nodes, we are going to see rejections, spikes, or breakouts. While on while on the high volume nodes, we are going to often see consolidations. Okay, so perfect, guys. Let's continue. All right, so now that we understand volume and price action from this perspective over here, right? We need to understand what happens on high volume nodes and what happens on low volume nodes and how are they correlated with price action. Like I'm telling you, volume on high volume nodes is directly correlated with consolidations because there's a lot of volume being traded on that price range, okay? While low volume nodes is directly correlated with price action candles like liquidity gaps or reversal candles because its normal price action on low volume nodes are either breakouts or rejections. All right, now you can screenshot this. Well, this is going to be recorded, but you can screenshot, and I also think you might screenshot this one over here. Okay, so now let's get straight to the charts. As you can see, I'm using this indicator over here, which is visible range volume profile, which is BRBP. Okay, these are my settings: row size 610, total volume, value area 100. In style, I have everything unchecked, and the style, I have it on this color over here. The color is irrelevant, you can use whatever color, but I like grays, black and whites because of how less it affects market psychology. Okay, so as you can see, I'm going to highlight. Okay, no, let's go to the weekly chart first. Okay, let's start with the weekly chart. Let's wait for the volume to appear. Okay, I'm going to move this to 80 so we have cleared the volume. All right. Now I'm going to try to highlight the low volume nodes on the volume. Okay, so we have low volume node here, low volume node here, low volume node here, 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 and here. Okay, yeah, there are more low volume nodes, but we're on the weekly chart, guys. I don't care to draw support and resistance on this area because what I care is to know where I will be interacting with the market around this area over here. So it makes no sense for me to check what's happening here until price reaches that level. Okay, so these are my low volume nodes, right? And we are only going to look for low volume nodes in this support and resistance volume level strategy because you don't want to interact with the market when it is on a point of control, unless it's a naked point of control where normally market rejects it or it breaks out from it. But because the best entry points are either rejections or breakouts, right? And where rejections and breakouts happen, they often happen at the low volume nodes. Okay, so as we know our low volume nodes and price action needs to be directly correlated with volume, what we need to look for is price liquidity gaps or reversal candles that are directly correlated with these low volume nodes. So let's start from here. We don't have any liquidity gap here, right, guys? But we do have these two reversal candles. You see, candle close, candle open at the same level, candle close and candle open at the same level, and it shifted trend, right? We have two, so we have an area over here, all right? And yeah, we're going to leave it like that, and then I'm going to explain you what to do with them. We have another low volume node over here. Then we check what is directly correlated with this low volume node, this liquidity gap high over here. We have a liquidity gap. You see? Liquidity gap. We also have a liquidity gap from here to here. All right? But this area over here is directly correlated with this low volume node. Then we have another low volume node here, which is, in my opinion, directly correlated with this liquidity gap low over here, because we are basically highlighting this whole liquidity gap over here in which price is currently trading right now, right? So we have those both levels over there. Possibly this one, no. Possibly this one, neither as well. These are the most most obvious one. Please guys, don't look at these charts and say like, okay, I have to find every single low volume node, because you're going to see, what about this little low volume node over here? Yeah, that's not worth your time. You want to see where volume was the lowest as possible, because that's where price might be headed to either fill a liquidity gap or to find liquidity to move into a certain direction. All right. We have another liquidity gap over, sorry guys, another low volume node over here, which is correlated with this liquidity gap over here. Yes, we have a liquidity gap over here. It's really small, but it is a liquidity gap, okay? Directly correlated with low volume node. And just for educational purposes, we are going to look at this one, which is directly correlated with this reversal candle over here, and possibly this liquidity gap as well. Yeah, as you can see, area over there. Now I'm going to erase these markers that we did here. Okay, and now we are going to click on all of them, because I want them to be on my daily chart. I'm tracing weekly levels for the daily chart. As you can see here, we have a resistance zone. Often zones are harder to break, right? And we also have a support zone over here. And you might ask yourself like, yeah, why, like, this is not working, basically because Bitcoin is not using this, this level as resistance, and neither is it using this level as support. Believe me guys, when price either reaches here and possibly retests and breakout, you are going to use this level, or either price starts going down again and it bounces from here towards this level, you are going to use this level. Because what these levels are highlighting you is that basically the weekly FPG, or the weekly liquidity gap, hasn't been filled yet, and we are trading within yet. And basically this is just a range formation. There's no trend on Bitcoin right now. Okay, so context, it gives you context. All right, so you can basically do the same. Let me erase these liquidity gaps over here on the daily chart to have these lines for the intraday chart. Because if you trade directly from the daily chart, that means you're a swing trader, right? But if you go ahead and do the same procedure that we did for the weekly chart, but for the intraday chart, you're going to get the same result. All right, so basically what we are looking for is for low volume nodes. We have one here, one here, one here, one here, 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 and here. All right, these are the low volume nodes that we are going to try and correlate with what price action did in the past. Okay, so this low volume node is directly correlated with this reversal candle over here. Okay, this low volume node over here is possibly directly correlated with this liquidity gap over here, and also with this reversal candle over here. Okay, I'm going to use this reversal candle so you don't have two very close levels to each other, which makes no sense. Okay, and even by using this, I'm basically highlighting this zone from this liquidity gap that we are having over here. As you see, price might be able to fill this in the future. All right, it's not necessarily mandatory, but it can happen. Now we have another liquidity gap over here, low volume, directly correlated with this liquidity gap. You see? Now we have another low volume node over here, directly correlated with either this liquidity gap over here. Okay. Now we have another level over here with this low volume node, which is directly correlated with this liquidity gap over here. And if you want, guys, if you want to draw a zone, you can do it, because it's also correlated with No, this one I don't like, because to be honest, if I erase this, you guys are going to see, if I draw a line here, this is a high volume node, and we don't want to put this. This is correlated with the low volume node, but this is not. So that line is completely fine over there. And to have more supports, we have another low volume node over here, which is directly correlated to this, possibly this level, or this reversal candle. Yeah, this reversal candle makes it. Okay, so we don't need more, to be honest. And what we're going to do is push these levels towards the intraday chart. And what do I mean by intraday chart? The hourly or the 4-hour. You see, you have clear levels where you want to see the market interact with. Okay, this doesn't need to be here because this is the daily. Oh, sorry. This needs to be on the daily, not on the hourly. Okay, this as well. All right, now we have a zone over here, and that's basically how you get your support and resistance levels backed by price, backed by volume, and backed by order flow. All right, so what are these levels for? You can use them as take profits, you can use them as entry triggers, you can use them as whatever you would like to use them, in order for you to have an structure that you say that you are only going to interact with the market when the market price reacts from this level or this level or this level. Because if you interact in the middle, you're going to get caught on range formations, and you don't want that. You want to get the aggressive move to the upside, right? You're going to get the rejection and then the move down. All right, and since we are highlighting low volume nodes, you know what to expect from that level. Like, it's either going to break out or it's either going to reject it. If you are on a bull trend, you want a breakout, then a retracement to this level. That's when you interact with it, and then you continue higher, right? So this helps to define a map on which you are going to use to be able to highlight the most important levels based on price action and volume. Okay, so there's another way that I personally do it. You can use this way or the way I do it. Okay, this is something I personally use as well. Okay, but normally, if for example I go to my Bitcoin USDT perpetuals on Bybit, okay, you are often going to see these levels over here, which I already taught you how to use this, right? To establish the trend based on price action. If you see my first class, right, that happened a week ago, you're going to see how I trace these levels. And now I use these levels not only for trend identifying, right, but also to understand with volume what could happen at these levels. This daily lower high is directly correlated with a low volume node. So what can I expect if price comes here? It's either it breaks out and continues, or it either rejected and continues lower, because this is a low volume node. And what do price do on low volume nodes? It rejects or it breaks out. Okay, so now I have said that this daily lower high over here is LBN, low volume node, right? If I see this one here, this daily lower low is also correlated with a low volume node. This daily lower low, it's also correlated with a lower volume. But this daily lower high is actually correlated with a high volume node. So what can I expect this? What if price gets here? Possibly it breaks out, it ranges a bit over here because we have a high volume node. It continues down, it retests the previous level and then continue higher. So now, since you know what happens in low volume nodes and high volume nodes, you can actually do these scenarios in your mind that you want to trade. That's how you get context out of price action and volume. Okay, so yeah, that's for today, guys. Let me know if you guys have any questions, please. I'm here to answer questions now. And if you don't have any questions, just let me know, and that everything was understood completely, which is good for me, and that you're going to start practicing how to use this. Oh, for some reason my screen is looking weird. You should be able to see it now good. Okay, yeah, now it's good. What do you use to check the volumes? This is the indicator, BRBP, Visible Range Volume Profile. Okay, this is on TradingView, available for, I think, the basic plan. It's not that complicated, neither it needs like a professional trading platform or whatever. Yeah, this is the indicator that I use to identify the volume, because I don't use like normal volume, like this one, like volume. I don't use this because it doesn't help me to actually know what's happening on the candles, because basically this is the cumulative value of both longs and shorts, and it's only telling you when you have like a high volume candle or high volume move. But I use other indicators that I'm going to teach you how to use in the next educational sessions, guys. But to apply this, okay, to apply what I just taught you, you just need this BRBP. That's all. You personally grown from, you want to start with your own capital, because that way you are going to understand like the psychology behind trading. Okay, you're just risking a small amount to get a high amount of money, which is the intelligent thing to do actually. But I would suggest you just start with your, when I started so for a whole account, because they can give you a lot. If you have any questions, for Twitter as well. Was this live similar to the one you did the other day in Paid Gem Hunters? Yes, it's similar. But it's not the same amount of information. Okay, normally when I do for Paid Gem Hunters, I explain a lot more of what's happening behind. You guys can see here. You are just having the basically the it's still a good version, but it's still the free version of what I'm teaching. All right, if you guys want to see the full versions of what I'm teaching with presentations, with numbers, with everything, you need to join the paid group. All right, and I totally recommend it because it's an amazing group, to be honest, to join. Okay, guys, does anyone have any related question about what we saw today? All right, amazing, guys. So I don't see any questions. If you guys want to reach me out, you have my Twitter, you have Telegram, you have Gem Hunters. Just talk to me. I will be there to respond to you guys. Okay. I watch both just to solidify in my mind. Amazing. That's good as well. You care about which are more why they work, because a lot of those levels. It's a lifetime payment, so it's essentially completely worth it, and I'm pretty sure with the leverage calls that you got there and invest. Going to write it over here. Basti code. That's the same handle for Twitter. Okay, awesome, guys. I hope you enjoyed. That's over for now. I'm ready to leave, and I'm really thankful for everyone that joined today. I hope it was useful, and if you guys have any questions, just let me know. Keep trading, keep being responsible, and treat this as a business, because it is, and it can literally change your life. So have a good one, guys. See you next week.